5 years out in the future sort of says, okay, we're going to be somewhere between, let's even go 10 years. It says we're going to be somewhere between 300,000 and 2 million 10 years from now. Well, that's actually a pretty narrow range, right? If you think about it, right? It's sort of like, it's not going to go down to 100,000. That would not be within the power law range. We are definitely going up in the next 10 years. We're definitely going up probably more than 2x over the next 10 years. Assets as big as the stock market or gold can have 10-year periods in which they're basically going down and then having to go back up. But Bitcoin doesn't seem to be that. Bitcoin seems to be an asset that is growing on this, quasi-exponential rate.
Fred Krueger explores one of the most intriguing aspects of Bitcoin, the unusual dynamics influencing its market behavior and its changing liquidity model. He notes that although Bitcoin's liquidity is still impacted by conventional financial institutions, it has a unique and developing stability. Fred emphasizes how volatility, which is sometimes seen as Bitcoin's weakness, is actually a normal phase of the cryptocurrency's development. Krueger uses historical data to demonstrate how, despite Bitcoin's capacity to manage global economic concerns, liquidity cycles have consistently shown resilience and adaptability. He also stresses that forecasting Bitcoin's future price changes and adoption patterns requires a grasp of its liquidity. Fred Krueger's observations provide an interesting perspective on Bitcoin's trajectory towards becoming a major player in international finance, regardless of your level of experience as an investor or your level of interest. Please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. This will offer more knowledgeable perspectives on cryptocurrencies and the financial world. Please share your thoughts in the comments box below. Thanks for watching and enjoy the video.
If you look at the Bitcoin price and you either look at just the 4-year moving average of Bitcoin, right? That's a sort of nice gradual curve up. Never goes down, by the way, right? Never has gone down once. The 4-year average of price of Bitcoin has never gone down. And then if you look at the log price of Bitcoin, right? The log of Bitcoin price, and you average the logs over 4 years, you'll see that that's just a complete straight line, right? Mm-hmm. So, I think that the chance of us deviating from that behavior in the next 4 years is very low, right? I don't think if something fits a straight line with 99% R squared, that you're going to see that line break in 4 years, And so while I do think we could go up to 500,000 next year, right? Mm-hmm. That wouldn't necessarily in and of itself break the power law. Okay. Could we go down to 50,000 next year? Yeah, we could. Would that break the power law? No. So I think the power law doesn't tell you much about next year, right? It doesn't, because to say that we're between 50,000 and 500,000, well, yeah, duh, right? That's not saying much, right? Where the power law tells you something, it tells you something 5 years out in the future, right? And 5 years out in the future sort of says, okay, we're going to be somewhere between, let's even go 10 years. It says we're going to be somewhere between 300,000 and 2 million 10 years from now. That's actually a pretty narrow range, right? If you think about it, right? It's sort of like, it's not going to go down to 100,000. That would not be within the power law range. We are definitely going up in the next 10 years. We're definitely going up probably more than 2x over the next 10 years. Do I know that the U.S. stock market's going up 2x? No, I don't. The U.S. stock market can go down or stay the same for long periods. We've seen that, right? The NASDAQ in 2000 went up to 5,000, right? And it got back up there. It took after 2010 to go there. So there was, we didn't get there. It took another 10 years. Gold went to $1,800 an ounce in 2011, and it took until 2019 for it to get back to that kind of level, right? So assets as big as the stock market or gold can have 10-year periods in which they're basically going down and then having to go back up. But Bitcoin doesn't seem to be that. Bitcoin seems to be an asset that is growing on this, quasi-exponential rate. Not quite exponential. It's going at an exponential, but the constant growth rate is not constant. It's decreasing, right? So that's sort of what the power law says. And whether you think it should or not, it's a mathematical fact that it has up till now, right? So I just think that the mathematics suggests that the power law will continue for the next 5 years or so. One thing that could significantly change the entire game would be if the U.S. actually significantly makes steps to acquire Bitcoin in its strategic reserve, right? Because I think if they did that, and let's say they actually did that next year, right? And they said, you know what, we're $36 trillion in debt. We're at 7% debt to GDP, but we're still going to go out of our way and either print money or sell gold or do something to get more Bitcoin in a strategic stockpile, right? And we're going to start going, let's say we're going to say our target is to add 1 million Bitcoin within 4 years in this pile, or 4 million, like, RFK Jr. said. I think if you get to something like that, right, where there's a very serious plan to accumulate Bitcoin at the sovereign U.S. level, right? If that becomes a reality, and then if that happens, we definitely have China sort of saying, well, if you're going to do that, we are too. Yeah. And then Russia would say, if you're doing that, we're going to do it too, right? It's just sort of like that movie. There was a movie with Danny DeVito, and he goes, I don't like nuclear weapons. I don't like lawyers, but if the other side has a bunch of lawyers, I need a bunch of lawyers, you know? And he goes, so lawyers are like nuclear weapons. I don't like them, but I got to have them. Yeah. And, I think that's the game theory could completely change with this, with the strategic reserve. I think that's the one thing I think that could cause things to move a lot faster than potentially we change. I do think that there's tons and tons of money in TradFi that's going to go into Bitcoin. But, TradFi is incredibly conservative and slow. So the power law is basically just sort of a measure of how slow that is, right? Yeah. It's a measure of how slow to react this enormous boatload of dollars that's sitting there, that's hundreds of trillions, right? For them to even to go to 1%, that's going to take an enormous thing, and it's not going to happen overnight.
The main focus of Fred Krueger's argument is the power law, a mathematical model that charts the long-term price increase of Bitcoin. Although it can't predict immediate price changes, it provides a solid framework for comprehending Bitcoin's potential over the next 5, 10, or even 20 years. This model predicts that Bitcoin's value will keep rising over time, making it unlikely that it will return to its previous lows. Krueger highlights that what separates Bitcoin from other assets is its adherence to a predictable development pattern. In an often unpredictable financial environment, it gives investors an exceptionally clear roadmap for long-term growth and a unique sense of dependability. Please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. This will offer more knowledgeable perspectives on cryptocurrencies and the financial world. Now let's get back and hear what Fred Krueger has to say.
And I think the power law says, well, you're not going to get 1% overnight. You might get 1% over a 10-year period, and you're going to get, a tenth of 1%, and that's going to go to maybe 0.2%, in a couple of years, and then it's going to go to 0.4%, and then 0.6, and then a full percent, and ultimately potentially multiple percent, right? But it's I don't expect that TradFi alone is going to. It's not like everybody's going to wake up and decide that they all want Bitcoin instead of S&P. These things take a long time for people's asset allocation decisions to really change. For the average portfolio, to go instead of from 60-40 to go 60 or 55, 35, 5, and then 5% for Bitcoin. It's going to take 10 years for that, for everybody to get on board with that. Why? Because people are slow, and people kind of create these mental models of how they should allocate their money, and we're just at the point right now where people's mental model includes that we're not at the top of a range anymore. And we're still at the top of the range. We're still back, where it was back in 2021, which was 69,000, So maybe we should wait until it goes back to 50,000 or 40,000 and then buy that. So anyways, I think I think that's the kind of thing that, that you come to that kind of conclusion that we're in this range, and 70,000 is the top and maybe 20,000 is the bottom, and maybe a better time to buy might be right in the middle, like 35,000, right?
Yeah.
And, from you and I are sitting there going, it's never going to get back to 35,000. It will never get there, right? But, from his perspective, it's like a very highly speculative thing that doesn't really belong in, an elderly person's portfolio. And if it does, maybe we should try to not appear too stupid and buy it at the all-time high. So, I just think, I just think that, I have a lot of friends from, Wall Street and stuff, and none of them own any Bitcoin. They don't. They I literally got a friend of mine who's, managing a multi-billion-dollar high net worth operation for Merrill Lynch. And he's like, I hadn't talked to him in a while, even most of this year. And he's like, hey, Freddie, congratulations on your Bitcoin. Because, I just can't deal with the volatility. I don't know how you can. I think that the things that are driving the market right now is, TradFi adoption. That's the big one, right? And the scale of TradFi adoption is, it's hundreds of billions of dollars, potentially, right? Potentially even trillions of dollars.
Fred Krueger highlights how Bitcoin's acceptance in conventional finance, TradFi, and larger investment portfolios has been developing gradually. Although Bitcoin has a lot of room to develop, he says it will take some time, possibly more than 10 years, for asset allocation to change from conventional frameworks, such as the usual 60-40 portfolio, to include Bitcoin. This is a result of institutional and individual investors' cautious and established tendencies, which make them hesitant to rethink their financial structures. Krueger describes how market cycles, institutional hesitation, and psychological challenges all contribute to the steady increase in Bitcoin adoption, which starts at fractions of a percent in portfolios and finally reaches multiple percentage points. He compares this cautious adoption to investors underestimating Bitcoin's upward potential and waiting for the ideal price before they commit, possibly in the middle of the cryptocurrency's perceived price range. Krueger maintains his optimism in spite of this reluctance, pointing out that the continued adoption by conventional financial institutions means hundreds of billions, potentially trillions, in future demand. This revolutionary effect solidifies Bitcoin's standing as a noteworthy asset class. If you're excited about where Bitcoin is heading and want to stay ahead of the world, don't forget to like this video, subscribe to the channel, and turn on post notifications for more expert insights. What's your take on Bitcoin's future in TradFi? Please share your thoughts in the comments below. Thanks for watching, and we'll see you in the next video.